Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, the 17th of January, 2023, 5:40 p.m. Central Time. Nice to be back. Good to see you all. Had a great trip in Puerto Rico. I'd never been there. Loved it. I was in Old San Juan a lot, and what a beautiful historical city. My gosh, I didn't realize how pretty it was. But now that I'm back, so let's talk where we're at. You know, if you really think about it, since Christmas, the stock market's had a heck of a run-up, and now we're starting to stall a little as we get into the earnings period. At the same time, the gold market, while I was gone, got over the 1900 level, and it's been holding there. Silver's around $24. The copper was strange today. The market really went down about 411. And then in Davos, which is going on, the conference there right now, the Chinese leaders, they talked up China, and they said that COVID has peaked, and that's without the Lunar New Year. I don't know if I'm supposed to believe that or not, because that's going to spread as people travel, and is it too soon to call a peak? But they also said that this new GDP number that they had for 2022, down to 3% from 8.1, I think it was a year ago. That's going to be their low point, and they are coming back, and they expect the country to grow. So the copper market went on a wild ride, first to the downside when it saw the contraction in the GDP. But remember, that was a year ago, then right back up. I'm going to still stick out my neck. I think I'm looking for over a $5 a pound this year in 2023. You know, it doesn't have to be the March contract, but it's what I'm looking for to happen. Energy markets basically higher as well. So let's take a look at gold, and you can see how the market has come back. The old peak was 1985. The market has come back. We're not that far from it. You know, you're $75. That's really not all that far. The market has labored and come up very nicely. Obviously, while I was gone, which was right in this time frame here, the market has picked up one more time and really run to the upside in a neat way. Until you take out 1870.90, the pattern is one of higher lows, higher highs, which should be overall bullish the market. Then we look at what else is happening, and you can see you had a bullish crossover back here as the year got going, and the market's just been going to the upside ever since then. And we got up to the point where over the past 3-4 days, the market had hit the upper Bollinger Band. The odds of staying over that are what, folks? 5% of the time. So when I see something 5% of the time and you've had this big of a run, you could get a pullback, but that doesn't mean you're going to just go into a state of collapse. You have to lose the embedded reading to tell me we're going to get back down towards that 18-day average. To do that, you'd have to close this number under 79. I don't see that happening just yet. Rather, what I expect is to see on the pullbacks the pros buying the market and then bailing if that occurs. And if it doesn't occur, looking for another challenge of the Bollinger Bands. When we look at the gold-silver ratio, you can see how that ratio is still staying with prices over this red line, which is the 18-day average of closes, which means in total that silver is a bit weaker than the gold market. Now, when I look at the silver market, this is why. Look at how this market is narrowed in. There's probably going to be a big move out of this market one way or the other. I'd be paying close attention to that. When we come to the copper market, again, like silver that I just showed you, the market had narrowed in back here, and then at the beginning of the year, it broke out to the upside. I've explained before, and I do it in my morning paid subscriber videos, how to determine if you have a breakout. And a breakout occurs in a certain chart pattern. This is definitively one of those. We had an outside day up today. So in my outside day course, one of the things I teach people is when you have an outside day up, you know, or at least there's an indication. The word you know isn't the right one. There's an indication if you were to take out today's low, be it on Wednesday or Thursday, there's a problem in the market, and it's probably going to try to make another run back to the 18-day average. Barring that, because you're in an embedded situation with it, I think the pros will use any break in there to buy until you lose the embedded reading with that red number closing under 79. We then look at the platinum market, and we don't have a real trend. We have a higher high, lower low scenario. The market has weakened considerably. When we look at the palladium market, it's in a bit of a downtrend. I've been telling my traders since I got back about that. I think the pros are probably selling the market towards the 18-day average of closes, stop right over that 1807.50 area, and looking to see can they drive the market back to 1668. Not my cup of tea right here. Whenever I see these Bollinger Bands narrow that much, I start thinking that the market's going to spin more. Certainly I have the downside bias, no question about that, until that number's taken out. And last in the dollar index, tomorrow's going to be a volatile day in currencies. We get the Bank of Japan announcement. Now, remember, we got a surprise last time, not out of the announcement, but out of the changing of the bands that they allow their interest rates to move in. Are we going to hear more talk about that? Are they going to talk about what's going to be? Will they surprise the market by getting away from the easy money policy? You want to see what they do, and that'll be out. Remember, the time differences sooner than you think. Pay attention to it, let it get into the market, and then make your move. I'll be talking about this on TikTok tomorrow from the CME group, so we'll see what goes on there. So you put it all together, you have some things going on that are a lot of fun in the market, and I talk about this, and I do it in a way each morning at 5:30 or so, where you get to see all the day's events. Now, what do I mean by that? Tomorrow you have reports galore coming out. Not only earnings season, you got capacity, production, you got utilization capacity, you got some home builders numbers coming out, you have the beige book coming out. I can go on and on. There's a string of events tomorrow. It's a huge day, including the Bank of Japan. You want to see that? You're going to get some Canadian, I think, inflation numbers as well. You want to be on top of it. I do that with you. First thing in the morning, I'm showing you what the reports are coming out, what the expectations are, how that all works, where it might fit in for you. How do you get there? Well, you can go to our website to get to the futures video, iraepstein.com, under the word research. That is the place that you would go. That's where you can do all your signing up for it. You can also click up here at the top. We're trying to get all that to work for you, but if there's a link up there, just give it a click. It'll take you right to the area. In the meantime, I'm Ira Epstein. Good to be back. I'll see you in my next videos and, of course, tomorrow.